Buenos días desde Oslo, donde hoy entrevisto a Philippe Sissener, el CEO de Sissener AS, una gestora noruega fundada en 2009, y vamos a hacerle una serie de preguntas que espero que sean de interés para la comunidad inversora en España. Philippe, good morning.
Good morning. Bienvenido.
Muchas gracias. I just wanted to ask you to introduce yourself for the Spanish audience and maybe describe what Sissener is and how the firm came about.
Sure. So the fund was started in 2009. My father wanted to take advantage of the global financial crisis and the aftermath of that, having spent his whole life on the sell side. He wanted to set up a asset management firm. And he got his own funds together, some friends, family, fools, whoever comes from to begin with, in a 3-year locked up vehicle. It delivered great returns as everything else from 2009 to 2012. But what he saw in 2012 was, or during that period, was that many people wanted daily liquidity. People needed cash for various reasons, and other people sold their business or got cash from elsewhere and wanted to invest during that period. So the result was a UCITS long-short structure, so same strategy as he'd done previously, but with daily liquidity. And that is our flagship fund today, Sissener Canopus, which he still runs. And then around the same time, I started my career on the fixed income side of things in SEB, the Swedish bank. And later I went on to Arctic Securities and Arctic Asset Management here in Oslo, where I, in 2018, was managing a series of fixed income funds together with some colleagues there. And my father convinced me to come and join him and help him grow from being a one-product company into a more full-flex asset manager. So the result of that was the Sissener Corporate Bond Fund, which is my darling, also a UCITS structure with daily liquidity available in euros, Swiss francs, dollars, Swedish kroners, and Norwegian kroners.
Could you maybe tell us what the objective of the fund is?
Sure. It was kind of building on the philosophy here that, you know, if we take care of the downside, the upside will take care of itself, sort of Howard Marks inspired. Like, it should be conservatively driven, Nordic high yield, which is our core competence sitting here in Oslo. It's actually the third largest high yield market in the world after the euro and dollar markets. It has grown substantially over the past couple of years. And I've been there since the inception, more or less, since the global financial crisis. It has grown exponentially since then. And it's become quite a mature market with a lot to choose from, but also a lot of traps that you need to avoid.
So what are the advantages of having exposure to the Nordic market for an investor based in euros?
I think there's a yield pickup, first of all, because of the various reasons, lack of rating, less liquidity, smaller companies, smaller loans. So there is almost at all times, almost 200 basis points, so 2 percentage points yield pickup. And that goes even for the currency hedge share classes, right? So whereas you have a spread at the moment of 250 basis points in Europe, it's 450 basis points here in Norway. And that's one of the great reasons to be there. There's also this aspect of floating rate notes, which is great. It provides less volatility when the interest rates fluctuate up and down. And also we've seen that the spreads are less volatile and the durations of the bonds are shorter, meaning also less volatility when the spreads go up and down.
Great. So when you invest in corporates, what do you typically look for in a company to reassure investors that you've got risks managed?
Sure. So it's a lot of the same that we look for on the equity side. It's great management and good cash flows. So for us, it's especially on the credit side, not that important. If the future story is great, we need to see actual substantial assets and or substantial cash flow, and preferably both. In maybe a challenged industry or a company with too much debt, of course, there's a reason why they pay these premiums on their debt. As long as the cash flow is there and the management has proven to be or to do what they have said they are going to do, we see that there is great debt servicing capability, even if they are at somewhere in the down cycle or even a bit highly levered due to an acquisition or a large investment. If the cash flow is there, it's a much preferred way for us to lend them as the debt servicing capability or the asset backing is substantial.
Is your portfolio, would you say, a high conviction portfolio? More or less, how many positions do you typically have?
It's a lot more concentrated than your average fixed income manager, who usually has 150 to 200 positions. So we really want to handpick our credits, stay away from 95% of the market or even more. So we want only 40 credits at each time, or it's somewhere between 35, 45. At the moment, I think we have 40 names in the book. That's few enough for us to have full control and have time to follow up with the management, follow up our models, and do the work. And it's many enough to be diversified when and if we go wrong.
So you're typically looking for a 6 to 8% return net for investors?
Right, and that's at where the current yield environment is today. So we're looking at usually between 3 and 4% underlying interest rates, and then on top of that, 3 to 4% credit spreads. So 6 to 8 is a good, I would say, ballpark or guesstimate of where we're going without giving any form for guarantee. Since inception in March 2019, we've delivered just short of 8% in the Norwegian krone share class.
Fantastic, fantastic. Finally, I just would like to ask you what the typical investor base looks like. Where are you seeing growth? In what markets are you moving into? And really where you see the capacity for this strategy, because I know obviously that you have to consider that given the size of the market.
Sure. So at the moment we're just a bit more than 500 million euros. I think we could be substantially bigger, but we don't want to be too big. Our core asset base is well diversified. Norwegian customers or investors are around 60-70%. And then the remainder is continental Europe, German-speaking, French-speaking. Now we're moving into Spain with you, so hopefully we'll see in the future some growth coming from Spain as well. But we really see a lot of demand from continental Europe coming into Nordic high yield and to our funds, which is always welcome.
Fantastic. And finally, in terms of the outlook for the next 12, 18 months, what's the firm's position and what's the fund's positioning with respect to opportunities and potential?
Well, it's the current yield is just high of 7% in Norwegian kroners. I think it's a bit more than 5% in euros in the euro hedge share classes. So given where we are today in January 2026, I think it's somewhat lower than if you look at the euro hedge share classes. I think it's reasonable to think that we're rather around the 6% return rather than the 8 in the next 12 months. But given the historical volatility and what we expect going forward, that's not the worst place to be.
Great. Bueno, pues amigos, lo habéis oído aquí. Tenemos una propuesta interesante, conservadora, de alta convicción, con un ADN claramente nórdico, y espero que haya sido esta entrevista de interés y bueno, vendremos a veros en los próximos meses. Un abrazo.
Muchas gracias.